If you want to make it as a trader, you've got to master your entries. Because the truth is, if you don't know how to enter your trades at the right place on your charts, you ain't never going to become consistently profitable. Never. Because what's going to end up happening is you are going to sabotage every great trading opportunity that ever comes your way until one day you wake up and you say, I've had enough. I have had enough of putting in an A+ effort for an F- result. And you know what? You deserve better than that. In fact, entries are so important to your overall success as a trader. I would say that if you take every miserable trade that you've ever made in your life, or any of the frustrating situations that you find yourself in, like premature stops, tiny gains, lack of confidence, or just the overall inability to trust yourself, those problems right there probably began because you made a bad entry. And if you can fix that, you can go to another level. So today I'm going to show you how to master your entries with something we call the FSE method, first sign execution. It's also called the Unsharp. This is the simplest way to make sure you are getting the best entry possible on all of your trades. But I'm not just going to show it to you. I'm going to trade the Unsharp method in a live market. That way you know exactly how to do it. So let's get started. So let's start out with this. What on earth is the Unsharp method? Because there's a good chance a lot of you have not heard about this before because it is unconventional. And truth be told, that's one of the reasons why it works out so well. But simply put, the Unsharp method is a way to enter your trades before the big move happens, or long before your typical standard chart patterns have developed. Now, this may sound strange at first, but bear with me because what I'm going to show you here in the next few seconds will revolutionize the way you enter your trades for the rest of your life. So on your screen, you'll see your typical chart pattern cheat sheet. And look, every single trader since 1940 has started out their career on these hand-me-down patterns. I did too 25 years ago. Good chance you're using them right now. Now, they're not the worst things in the world, but you're going to find out there's a reason that you're inconsistent with your trades and you're struggling to go to the next level. And that's going to be because of how these patterns work. And let me show you what I'm talking about. I'm going to kind of magnify this so we can take a look at this. I'm going to circle entries here for just a second. And I want you to tell me, do you see anything, does anything stand out about these recommended entries on these particular patterns? And it's okay if you don't, I'm going to tell you here in just a second. Here's the thing. If you're a scalper or a day trader, which a lot of you are, you're using what? Small time frames, correct? Like a 1 minute or a 5 minute, which means this entire pattern took place over a very short period of time, meaning that not too long ago in the past, this asset was trading all the way down here. Now, this pattern is recommending that you buy long after a move has been made all the way up here. And if you look at every single one of these patterns, it's identical. They have you chasing into strength or chasing into weakness. Now, again, it's not the worst thing in the world, but here's what this forces you to do, and this is where the problem occurs. When you do that, you only have two options. One is you must choke your stop so tight to your entry, the risk of you being randomly stopped out by an algorithmic program or a nuance of the market is extraordinarily high. So for every single trader out there that ends their day angry because, oh, I'm getting stopped out and everything works, there's one of the biggest reasons right there. Stops are just way too tight. But worse than your stops is the target price. Look how close that is to your entry. That is so close that you are never going to make the big gains. Now, I don't know much about you at all, but I'm going to guess that you did not get into this business to fight over little tiny gains, did you? You came here for big gains. And trading these patterns gets you stopped out more often than not. And when you do win, you never get the big gains. And that will not work over a long period of time. So the Unsharp method does this. What if I was to tell you that with a high degree of accuracy, I can give you a clear and present signal that will get you in down here or short from way up here before that pattern has developed? And instead of entering where everyone else does, you use all of that liquidity to sell your position into, or vice versa. That is the unsharp. So this brings us to step number 1 of today's process, which is how do we know a pattern is going to develop long before it actually does? I mean, just saying that out loud sounds ridiculous, am I right? But you're going to realize here in a moment, it's not ridiculous at all. It's quite predictable and it's quite profitable. So let's go back and take a look at this bullish continuation pattern here for just a second. You see, before this pattern ever started, there was a pattern before it, right? And there was a signal in that pattern that indicated it was over and it had failed. And because of that particular signal, that one candle signal right there, let us know that the next probability in the sequence of this chart would be the emergence of a new pattern. Now, this might sound totally weird to a lot of you, but do you ever remember that Semisonic song from the late 1990s, Closing Time? There's a famous lyric in there that says, every new beginning comes from some other beginning's end. So the ending of one pattern, a specific signal, opens the door for another pattern to begin. So rather than me sit here and quote obscure song lyrics from the 1990s, let me show you exactly what this looks like on a chart. Okay, so on the screen here, you're going to see an intraday 5-minute chart of the ES E-mini futures. Now the asset doesn't matter, nor does the time frame. I'm just letting you know what I'm going to be using for today. And here's what I want to do. Does this pattern right here, at this point, does this look like that bearish continuation pattern? Does to me. Now, it's not 100% perfect because they never are, but this definitely looks like a bear pattern or a bearish continuation pattern. So according to this cheat sheet, what they're recommending is that you are entering your position all the way down here. Your stop loss is up here and your target price is further down here. Now, what I want to do at this point is just kind of play this forward under the next bar and look what happens. Immediately, everyone who took that trade or pattern or setup got stopped out. And look, we've all been there before, right? But it's more than that. This candle, I'll delete this for just 1 second, but this candle signifies that this bear pattern, this bearish continuation pattern has failed, right? There's a failure of that pattern, which means logically, common sense wise, right? You should be followed by what? A bullish continuation. So what should happen here is this should mark the origin of a bullish continuation pattern. So let's just go ahead and kind of move that forward, see what we end up getting. And what happens? That's exactly what you get is a bullish continuation pattern, right? Now, let's go back and look at this. Since we've established that this in fact is now a bullish continuation pattern, let me go ahead and draw it out. Here's your opening move, right? There is your sort of wedge that they have drawn here on this chart. So they're recommending that your entry is here, your target price is up here, and your stop loss is just right underneath of here. So if I kind of move this forward, what happens? A few candles later, you have what? The same identical yet inversed relationship that you had down here. This bold red candle, like the green candle before it, negated the previous pattern. So this red candle does what? It negates the bullish continuation pattern. So how about we go from here? Because, this trading stuff is really difficult. What do you guys think is going to happen here? What pattern might happen after that? I would guess and assume that you're just going to turn around and end up in a bearish continuation pattern, correct? I mean, that seems like the odds on play. And what happens? That's exactly where you get. You get a bearish continuation pattern, okay? Now let's go back here one more time because I'm not done, because I wanted to show you just how repetitive this is. So now if we take a look at the price here and we mark it from where that originated, this is definitely your bearish continuation pattern, correct? So what happens here? The first moment there is a green bar reversal in that. This period marks what? A negation of the failed bearish pattern. So what do you want to take a shot at? Right? What do you say? What do you say? What do you think happens? Bullish continuation, right? And the cycle just continues to repeat itself over and over and over again every single day of the week. So if I kind of move it out, that's what you're doing here over and over again. You're transitioning from bear pattern to bull pattern to bear pattern to bull pattern over and over again. So now that that's done, we can transition into step number 2, which is levels. So what if I was to tell you that long before that pattern ended, you had a good idea, the exact point on your chart where that reversal or where that pattern would fail? I mean, that would give you a significant advantage in this trade, am I correct? Because once it gets there, all your attention and focus is right there on getting the best execution. And I can do that by showing you how to properly use levels. So every trader that's listening to this today, whether you decide to trade this strategy or not, your number one goal should always be to look at levels each day. Because if you zoom out on all your charts, you're going to find they spend an awful lot of time testing each level, moving back and forth. And with each one of those moves, we are gaining data that we can use to make quality trades in the future. So let me show you exactly what I'm talking about and what it looks like here on a chart. If we go back and we look at this 5-minute ESE mini, what I want to take a look at is that very first drop. I want to highlight, or let's say box in a lower level. Let's take a look at the sum of these 3 candles right here. This one, and this one. Now you'll see right here as this dipped in, there was a small wick on the bottom of that candle. Now, if you're brand new to technical analysis, what this is actually indicating is that there is some buying activity where this bodied candle was completely full. There was a wick here. Now, even though price declined on the next wick, hopefully you guys can see this. I'll open it up if you can't. There was also a little bit of buying. And now a third candle, you're trying to revisit back into this area where there were previously buyers. Now, what we need to do is once we see this is evaluate the quality of this area right here. What does this specific number mean? What does this specific level mean? And the best way to do that is just kind of take this box and pull it all the way back as far as you can to the left. And I want you to tell me what you guys would see here. And it's okay if you don't see it right now. We're going to talk about it. So if we kind of move back here, let me grab another tool. You'll see that this candle kind of dipped right into that boxed area, correct? And if we kind of move back over here, we have the same exact thing. Another buyer stepped in the recent past. And of course, a third area, you had a couple of them right here. So if you kind of span this over the short period that it is, you have 1, 2, 3, and now 4 areas of a known buyer. So here is the trick or the key or what everybody needs to know no matter what they're trading. If you short sell something like this, opening a position short to profit on a down move, or you're selling a long position, this is a terrible idea because while this candle looks red, it is bordering against a very large buyer that's been noted in the past. And if I open this up, you'll see the very next candle confirms that. It turns around and goes green. So that's why this candle negated the bearish pattern, is because this area right here, there was a known buyer that was present several times throughout the chart. So this is just not some random knife catching, a term you probably heard, and that's what led to the rally. So if I kind of move this forward, we'll show you here on the other end what you might see as this kind of moves up. Let me kind of readjust the chart and we'll get into this spot. So up here, let's take a look at this area. And what you're going to know about technical analysis is these charts just continue to repeat themselves. That's the beauty. Whether they go up or down, the outcome is normally the same in the way they make their transition. So if I grab that box tool one more time, you'll see you have a very similar pattern up here. You have 3 wicks. They're very, very minute on this one, but you'll see there is in fact a sell wick on top of this candle, on top of that candle, and this one actually reverses. Now again, when you see that, what has to take place is what is the validity of such level, right? What is the importance of such level? So if we back that out and we see, has anybody ever come into play? And sometimes you do have to back them up a little bit. You're going to see, in fact, there is, right? There is more than a few pieces of activity. So let me kind of move this out here. You'll see there was sell side activity. I'll open that up because I don't think everybody can see it in the recent past. Here's 1, 2, 3, 4, and 5. Now, that's the basic support and resistance, but this area is also of quality. So if we come back and look at the chart, what happens when you reach that sell side liquidity, it would be called, you get a reversal. There was a predictable area that somewhere in that neighborhood, it would start to roll over. Now let's come back and take a look at the last transition here, and you look at this bounce, it's the same thing. Where did this bounce come back to? It came back pretty close to, almost to the tip of the previous box. So each and every one of these levels were tested over and over again. So now we can move to the third and the final step, and of course the most important step, the one that you came to this video for, and that is the entry. Because now that you know what to look for in terms of the reversal of a pattern, and now that your eyes are focused on a particular level where you can get in on the best risk versus reward opportunities, now all you need is just one candle to give you the go-ahead. And the moment you see this candle, you need to get into the trade. You have no time to waste on this. You get in it, and I'll show you exactly how that looks here on the chart. So let's go back here and take a look at our intraday ES E-mini 5-minute chart and combine the lessons we learned to show you how to do the entry. Now, we've already established that we're in some kind of downtrending bearish continuation cycle. And let's just say for today's example, it's just an example. Not every trader in the world is trading this way, but let's say they're following it by the book. We know there's a lot of traders who are entered here short. Okay, and we're going to use that to our advantage. We also know that the majority of those traders are going to stop out somewhere up in this area, according to the way these charts are passed around, and they're looking for a target price. Now, we already drew the shaded box, so we know that when price gets somewhere in this area, a buyer has shown up, and you'll see here on these two candlesticks, these two wicks, they have shown up. Okay, so all we need to see here is just one green reversal candle, something that looks like this. And why we need this is we need the one green candle to threaten the late chasers into the shorts, causing them to stop out. When the stops are hit, those convert to buy orders, which just fuels the fire. So all we need is one candle to take out the other candle. So I'm going to kind of get rid of all of this. We'll move it forward one candle and see what happens. And there you are. This candle, let me open it up, most likely stopped everyone out. And why? Because this was your final shot to get rid of the big buyer, and you couldn't do it. And now you're flipping the script, which means this pattern, this bearish continuation pattern, has now officially failed, correct? It's a failed pattern. Now you can enter just right here. As I said earlier, the faster you can enter, the better off you're going to be. So let's go ahead and put a buy order in there. Stop loss goes underneath the low of the day. Target price is back to the origination of that pattern. Now let me give you another one here, and let me get rid of all this mess. This would be my entry. If you wanted to be slightly more conservative, you could wait for the complete closure and the development of another candle. But let's go ahead and play that, and I'll show you exactly what I'm talking about. So you could wait for a moment like this. Oh, it already took me out there. Look, and let's go back and just focus on this. I don't want to confuse anybody. This would have been also an entry signal right here on the reversal. And again, take a look right before that one happened, right? There was another wick pulling back in. Now, this is something I want to take one more second to explain because it's very, very important to traders. Our patterns don't often work out right away, correct? So as long as the validation is here about the levels, as long as the buyer keeps stepping in, it's only a matter of time before the rally shows up. Maybe there's a couple sucker candles in between, but you'll see you could have entered here. But nonetheless, that's exactly how I would do it. That's exactly how I do this system. Now, if I kind of move it forward, we'll take a look back the other way, and it's the same kind of inverse relationship if you choose to short. So we'll do one here. So take a look. The moment this pattern had failed and got rejected, the entry was right. The aggressive entry could have been right here. Let me open it up. Right here on the break of this candle. So I'll put a line there where a aggressive entry could be, is right there. But a conservative entry would be on the complete failure of the breakout candle. So let me explain. Here was your bullish continuation, you get a strong candle breaking out, tagging resistance where there's a known seller. Seller confirms, and now you get a push down. So that's a short by all intents and purposes. Now, if you want to be more conservative, you can wait for the complete failure of that big green candle, the next candle, right? It's almost the same as the other one, aggressive or not aggressive. And right there would be the next candle, that one right there could be the entry. So let's go ahead and put a sell order there. Inverse relationship here, all you would do is put your stop loss above the high a day, above the big seller. Target price moves down in here. And then you just go ahead and let your trade work. Now, again, sometimes they'll move around a little bit on you, right? And the target price got hit, and you keep repeating that. So what I'm going to do now is move over to the live portion of today's trading. And what we're going to focus on are those three main things. I'm just going to focus on those, nothing else, no other strategies. So we're going to look for the failure of a one pattern, right? We're going to, once we see a failure or potential failure, we're going to assess the level in which that instrument is trading and determine at what value is that? Is this a good spot? And if in that valued area, we see a turnaround, right? Step 3, one candle, any candle, we are going to go ahead and enter the trade. This gives us, as you see, the best risk versus reward available. And that's what's going to make you money over the long time. So let's get into the live trading. Okay, so I've already entered long this NVIDIA, and I'm going to give you guys a second to take a look at the chart. I'm sure you see it, but just figure why would you do that? Why would you buy something that looks like this? Let's walk through each step. We already have our fade here, right? We have our broken, right? Our broken bearish continuation pattern, indicated by this nice solid closing green bar. Now, if you're aggressive on your entries, you could have entered that bar. That's like the power its hour. But we got the takeout of the previous bar and even a re-verification. You see there's a wick right there, so we got a re-verification. Stop loss will be under this wick. Target will be all the way back up here into this area. So we'll come back and revisit this, and then I'll walk you through a little bit more of it, but that should be pretty straightforward here at this point. AMD has in fact worked out, it's finally got its way back up there, and it's almost back up to the high, so I'll be selling this soon. But I wanted to take this moment. They don't always do this, but here's what I want to show you, what's really, really important. Based off of the two first step and second step structures made this trade what it is. The failure of the bearish continuation, the tap of the level, then the candle. All three of those formulas combined allowed you to zero in where the potential short-term low of the day is. And if you can do that in most cases, you're going to do good in this business. All right, my friends, that will conclude today's video. And as always, it is my pleasure to share my journey as a trader with you in the attempts that it just helps you in the slightest. If it can just make you just a tiny bit better, my goal is accomplished. It's a journey, right? Now, at any time you need any help, go ahead and put anything you want down into the comments section. I'll do my best to get back to people. Sometimes I get busy, but I try to answer every comment, but it is the way it is. Now, one thing I do want to remind you is every single week, my wife and I put together a complete watch list. We even include these levels that we're talking about, setups that look just like the ones that we traded. It is free. It's just a guide that we do to just kind of give people help, just get them pushed into the right direction, making some better decisions and starting there and building themselves into quality traders. So again, I mentioned it already. It is free. The link is down in the description box. So if it's something that you're interested, go ahead and just type that in. As always, I really appreciate your support. I appreciate your comments. I appreciate everyone in the trading community. And it is my pleasure to do these videos. And until next time, thank you for watching. Cheers.